Hi, everybody. It's Tony Caldwell, and welcome to another episode of Uncaptive Agent, where we talk to people from across the independent agency system, distribution system, about their views on where we're headed, both as independent agents and also just in general terms, the distribution of insurance. And so I have with me today Chris Paradiso, who is on the East Coast, and Chris operates the Paradiso Agency and was recently named one of the agents for the future by Liberty Mutual Insurance. And he's been in the business as an independent agent for about, 15, 16 years now, since 2006. Prior to that, Chris did what I did in getting started in the business, which started as a life insurance agent. And then figured out, you know what, instead of getting up unemployed every day, I think I'll build an annuity and get in the property and casualty business. Chris, welcome.
Thank you. Thank you for having me. Boy, you summed it up. Build that annuity.
So, we had a joke for many years in our agency, Chris, because we had a couple of partners who came, from the life insurance business in addition to myself, and they always wore coat and tie to the office. When everybody else was wearing a polo shirt, and they drove big cars. So we always kidded them. We said, you dress like a life guy. So
yes, anyway. I still dress like a life guy.
Yeah. Well, you know what? Obviously, you've been successful as a P&C guy, so who cares what you're wearing?
I agree.
Yeah. So we were talking just a few minutes ago about the fact that you love to read and that you read a lot. And so I'm curious, as somebody who, is interested in constantly updating your knowledge base and staying current on what's going on, what you think about where we are today as an industry, property and casualty industry with, 30 some odd thousand agencies across the country, and where we're going to be 5 years from now. So just in general, what do you see the next 4 or 5 years looking like? They're going to be the same as they are today? We have a lot of change. If so, what's the change look like?
I think there's a lot of change. I think the amount that COVID changed the industry was tremendous, because so many people who maybe didn't feel like they wanted to embrace technology and didn't want to change were forced to change, right? You were forced to change because no longer that typical analog telephone working anymore, because now all of a sudden you can't work in the office because of COVID. No longer mailing the applications, right? So now all of a sudden, I just was reading something about e-signatures. From January of 2020 in Connecticut, there was only 17% of the agencies that actually had e-signatures. But thanks to COVID, that it's closer to 80% now, due to COVID, right? No other options, are now on e-signatures. If COVID never happened, that to get to 80%, probably to get to 50% was probably 10 years out. I mean, it's just amazing on what COVID has done for technology in our space. But I think it's going to change even more. I think, as you know and seen, that the mergers and acquisitions has been enormous in the last 2 years have been record-setting numbers, right? And once again, you're still seeing things moving and agencies continue to sell. And the interesting thing, in my personal opinion, is agencies' evaluations are going to grow because there's less agencies to be purchasing. Now, I do see a younger generation coming into this. I really do. And I think there's going to be some diversification, which the industry really needs. So I do see the industry changing and evolving. I think with the younger generation and with other groups, more women agency owners, more Black agency owners, more Asians, I see it coming. I really do. And I know people think I'm crazy when I bring it up, but I do see it coming. And I think it's going to move the industry along, especially if we can get some younger agency owners even starting up, because the technology part of the industry is going to play a huge role, in my personal opinion, of the evolution of what the next 5 years brings, which I think the one thing we're going to be talking about is embedded insurance.
Okay.
And a lot of agents, I had a couple talk to me today. They're like, I don't understand. What is embedded insurance? Well, I said, let's just take a real easy format, right? Tesla is embedded insurance. Why? Because when Tesla sells a car, it's going to come with insurance. And I think, and people say to me, well, what is that going to do to personal lines? Well, I also think it's going to come right along in small commercial, because it's here now and maybe it's lightly being used. But if you take the Gallaghers of the world who are ahead of us and you look at what they're doing with embedded insurance, they've written thousands of policies. And I just feel that the next 5 years is going to be all about embedded insurance. And it's going to be a household name in the agency world, I think, over the next 6 to 12 months, that people are going to know and understand it. Some are going to follow their way and find their way into it, and others are not.
Right. Well, and this whole idea of embedded insurance, particularly with automobile companies, has been around now for 4 or 5 years at least, and increasingly you see other auto manufacturers are trying to take similar tactics. I'm not sure that the term is as widespread as the idea, but I like the term embedded insurance, and it gives us something to identify what we're talking about. So let me ask you this. So, you have a real vested interest in the success of the independent agency system. You've got 25 or 30 employees, and you've been in business now for a long time and want to stay in business. So how does your agency compete against that kind of competitor, or do you just cede the ground and go a different direction? What do you think is best for most agents that look like you?
I've taken a little bit of a different approach. My dad, being 87, looks at me and says, I think you're a little crazy. And I can assure you there's other agents that probably are saying the same thing. My approach has really been trying to find focus and build relationships within senior benefit type of businesses. So if we can find a senior benefits platform or agency who focuses on investments and senior benefits, which when we talk about senior benefits, we all know and understand it's Medicare supplements.
Mm-hmm.
And that's really where we've been focusing on. And the reason being is the older generation believes in insurance more. They realize that they need the insurance and they need the larger amounts of insurance. So they're less to fight the coverages because they see value and they understand that they need to have things protected.
Mm-hmm.
But I also believe it's a different generation based on loyalty. So I find that group 65 and older to be very loyal. So I will say I will continue to focus on 65 and older. And why my father thinks I'm crazy, because he talks about the short lifespan of a policy, but I always argue with him. I said, Dad, the lifespan of a 35-year-old's policy is a half to probably a quarter to somebody 65 because of their loyalty. Okay. We've proven that just based on what we write today and how we've gone at this for the last 5 years as an approach to go in and get after seniors. And so we're not focused on the 25-year-old.
Right. So, obviously every agency in America can't focus on the same thing, or you'd have more competition than you know what to do with. But you're also, though, this is just a piece of what I suspect is really an underlying philosophy, which is targeted marketing, because you've built some, really nice niches, I know, in the property and casualty space, going after a particular kind of business and then doing it in a whole lot of states. So you're actually expanding all over the country.
We are. We're in 43 states, yep. And you are absolutely right. So I always call it, in the life insurance business, it was called the tickler system. And you remember a little box and it had every month, and those were prospects for every month, right? So I say we really only work in a 3-pronged tickler system. So one of the avenues is the seniors. The other avenue is our niche, which is parcel delivery. Anything parcel delivery, package delivery in any format is our niche focus. And then our last focus is really digital and more on the cutting edge, pay-per-click, email marketing, digital marketing, and data marketing. Okay. So that is our 3-prong approach to our marketing. And it's wildly different in every avenue. If we talked about our data platform and how it not only helps retain business, but it's instrumental in helping us write new business, because it's given me hobbies, it's given me income levels of a household. Because what I think we don't do well coming from the life insurance side, life insurance is all about asking questions, right, Tony? You know, how much do we have to protect? How much income do you have? Very, very intimate and very private, right? The property and casualty is much more, hey, do you have your deck page? Let me look at your deck page.
Right.
It's really a different approach. But what the data platform helps us do is really understand that Tony income is about 200,000 household income. Why am I going to come and offer him $1 million umbrella? And what I find in the industry is we love to offer $1 million umbrellas, but we're really doing harm to our clients, because if we can't dig and pull that information out, we should be offering 3 million and 5 million. But sometimes I think what we do is we get apologetic, like we're afraid to spend their money. But I always challenge people to say, are we afraid to protect their assets and protect their money? We can't be afraid to protect their money. Right. I would rather lose a prospect because I said, Tony, I understand you have $1 million. I firmly believe that you should at least look at a 2 million and a 3 million umbrella. Here's the reasons why. And also, here's the cost difference.
So you're bringing a couple of things to the table that I'd like to just explore for a minute. So, when COVID hit, I came out and said geography is dead. The idea that we only operate in our local hometowns, to the extent that it wasn't already dead, is dead, because the technologies that COVID is making commonplace now make it possible to develop relationships anywhere. And so you're doing that with a 43 state footprint. But the use of the data and the way you're making use of it is actually something that I've also been talking about for several years, which is that to be successful in the future, agents must stop being transaction facilitators and go back to their historical value proposition, which was relationships with their clients. And so, and the third leg of this stool, if you would, is that the data, that the technology that we now have available to us removes the drudgery from our work, giving us the time to focus on building a relationship. And so I suspect that in a different way, you're saying something extremely similar, are you not?
Identical.
Yeah.
Relationships matter in a big way, but I also feel that we as agents must do a better job in education, number one, in not fearing, we're so afraid to spend some of their money that we don't always do a good enough job. It's, I could tell you up until 5 years ago, I mean, I don't think we might have one umbrella above $1 million. I can tell you now, this year alone, we've already done over 15 umbrella policies at $10 million. So
just as an aside, I mean, this is a really interesting distinction, and I think it's particularly valuable for younger producers, which is, do you operate from a position of sympathy or empathy?
Yes.
And sympathy means that, I feel badly for you, and empathy means I feel your pain. It's different, right? And so
very different.
What I always tell folks is, look, you got to put yourself in the other person's shoes. And your limits that you have personally based on income or need or whatever are irrelevant in the conversation. It's what does the person you're talking to need. And if you really understand them and where they're coming from and have a relationship with them, then whether it's $1 million or 5 million or 10 million or 20 million, you're just providing really good information for them to make sound decisions around based on their situation and not your own limit.
Absolutely.
Your own limits, right, of perspective. And so technology actually, it's interesting. So I want to talk for a second about that. So you're using data, you're gathering data in advance on people you're talking to, or maybe simultaneously.
Nope. As we are taking that information, as we are talking with them and entering it into our management system, which we do have an API built with our technology tool, which is called the Donna product by Arias Analytics, that's actually reading, not only reading information such as, emails if we've emailed them, and it's giving us a centimeter score, which is a net promoter score without me ever asking you, Tony. There's a huge difference. A lot of people don't understand. The net promoter score means our agency emailed you and Tony answered that email and rated us, and it came back to us. A centimeter score is a score that's being built off of learned AI, and it's reading and understanding emails and phone calls. And it's giving me that quote unquote net promoter score without me ever asking Tony for it. That's one aspect. But the other aspect is it's feeding me information. It's telling me Tony likes fishing. Tony, you know, collects guns or collects coins, or, you know, any type of other information, because a lot of people say, how the heck can you get this information? Well, remember, the world has done something that we all don't even realize. Is we go to a grocery store, we have this little card, right? That little card says everything we like to eat. It's the same thing when you get a magazine that's trying to sell you on something. It's all coded. So when you call and you give your name, it's going to a number. So if you're collecting coins, and let's just say through a magazine, you know, you get all this warehouse that wants to sell you these coins. It's all coded. So that all that information is being sold. And through our data platform, it's coming in and helping us understand so that we can help base the conversation and understand Tony a little bit more, as life insurance always said.
Right.
You get in someone's house, and the first thing, Tony, you look on the wall, because always on the people's wall in their home is the people they love.
Right.
And if it's basketball, it's basketball. If it's their mom, it's their aunt, their uncle, their kids. Their wall tells them everything, just like Pinterest. You pin something on a board. That's why Pinterest is such a powerful social media tool, because you're letting the world know what you really like.
Mm-hmm. So you're doing something that I think most agents are actually waiting for insurance companies to do for them. So carriers actually, not all of them, but the more progressive ones have been really making investments in artificial intelligence and data analytics, and then data in the background, and obviously, you know, pre-filling applications and all that kind of work to speed up their processes now for 5 to 7 or 8 years. But you're actually taking this to the step of getting to know your client better up front, which I do suspect that many agents would love to have the technology, but they're waiting for ABC Insurance Company to give it to them. How did you come to make the decision that you needed to do this for your own agency? And then what was your process like going to put that capability together?
Well, I was very fortunate. I spend a lot of time in the insurtech world. I insure quite a few insurtech companies, and just kind of built my name because I'm nosy. I like to see what's going on. I like to understand people's products and what's the pain point that you're trying to accomplish. Because in the insurtech world, I think there's a lot of people that are building products that haven't spent enough time on our side. So with that being said, I'm not criticizing them. What I'm saying is it's intrigued me enough to really be fishy and nosy. And I built a great relationship with, I consider him the godfather of insurance. His name's Frank Setner. And Frank created Sajita Management System and sold it in the 1990s, mid to late 1990s. He became a client of mine, and he also is the head of the Digital Accord. And just with his networking, several data people have reached out to him. And because of our relationship, and he knows that I love to try new things, it's just kind of I love change. And probably one of those guys that you will walk into my office and say, the last time I was here 6 months ago, I think it was a different color on the wall. Yes, absolutely. I love change. So he brought this data company, and the data company I have today, we had another data company who bailed after about a year or so. We didn't make enough headway, and this company came in. They worked with life insurance companies, which really intrigued me, because I think when you look at underwriting from the life insurance side versus the property and casualty side, I know some people will send me some hate mail, but the life insurance side, you don't see these swings, do you?
No.
You see these massive swings in the property and casualty. In the life side, it's very, very, very steady. So, and a lot of that is behavior data, which I think plays an enormous role which is where I think the property and casualty world's going to go, where behavior data can really help us if Tony's a good risk or not a good risk. And can I give you a quick example?
Sure.
Some of the researches that we were looking at is people who scratch lottery tickets on an everyday basis. Would you take them as a good driver risk or medium driver risk or bad driver risk? Most likely a bad, but could be a mid, but probably not a great driver risk, right? Why? Because they like risk, scratch tickets. And how do we get that data? Well, that data is easily accessible because if you win on the scratch lottery ticket and you have to go and submit it to the state, there's odds on that. And if you won $1,000, you have to go submit it, and it's public information. So that data, once again, is being out there and being available, but that is behavior data, just like life insurance. Do you skydive? Well, if you skydive on a regular basis, you are a higher risk and they're going to pay more for that. And I think behavior data is going to play a huge role. And this company came with that about 2 years ago. And Frank brought them out and they said, are you willing to let us into your management system to build this for the property and casualty? We have something built for the life side. And it intrigued me both because Frank Setner, who, in my opinion, I wholeheartedly trust with my life, really believed in these guys. These guys are super smart, savvy, and they came in, they flew over from India. They now live here temporarily as they build this business and really built an unbelievable product, not only for me, but for other insurance agents and carriers to really, really understand and gather and bring data that's usable for us. Because everybody talks about data, but does everybody understand usable data and what we can do on it?
Right. Well, a man named Peter Diamandis, who wrote the Abundance, The Future is Better Than You Think, and a serial entrepreneur, has made the statement for about 6 or 8 years now that everything's knowable today. So there's literally no secrets, which is a little scary in some respects. But
it is.
But the point is, to your point, and you've given several examples of how we're just constantly allowing others to aggregate data on us. The trick is, how do you pull it together and make it useful? And so that's really what we're talking about. And you're a pioneer in this area in as much as not very many independent agencies are likely doing the kind of work you're doing right now. But you, I think, believe that in a few years, everyone will either be doing it or they won't be in business. Is that right?
I absolutely 100% believe that with the use of open APIs and with the use of management systems to continue to be more transparent and open and want to work with third-party vendors, I do feel agents have to have an open mind and invest in this too. So I do think it plays roles in all aspects, from the AMS to the carriers, to the agencies being open-minded, and to the technology companies that continue to build and want to get into this industry. So yes, I do think we're 24 months away. And I still don't think it's going to be 50% of the agents in 24 months, but I think it's going to be much more common than finding somebody like me. Which, yes, I am a rarity, but I am trying to educate agents to really understand this and open their eyes to say, hey, try it out, test it out. It's not that expensive.
So let me take you back to a comment you made a few minutes ago, kind of on a slightly different subject, but related to this, and it was around the comment you made about agency acquisition and the fact that that's been record-setting over the last couple of years. In fact, I read yesterday 26% over 21's number of transactions, 26% higher than 2020s, which are down a little bit, but not hardly at all, just because of COVID. So, and it's been 4 or 5 years of a torrid pace, frankly, much more than we've seen. But you made and I think everybody recognizes that that's continuing and likely to for a while. But this is early March 2022, and here in about 12 days, the Federal Reserve is set to meet and begin potentially the process of rates. Now, Jay Powell said this morning, a quarter is what he's thinking. As somebody also involved in banking, I was sort of hoping it would be a half, just because I think they need to get on with it. But The point is rates are going up. And EBITDA multiples, which is the way we denominate transactions in our business, are based in large part on the fact that private equity and other players can borrow massive amounts of money for very little. And so there are some who believe that as rates rise, multiples will decline because the cost of borrowing goes up. You said that agents are going to continue to see an increase in value over time. Why? So I think that's a view that maybe swims against the mainstream. So I'm curious why you think that.
Why? Because there are many companies like the Hub Internationals, like the Brown and Browns. I always say the big boys, right? A lot of their strategy and the way it's been put together is they have to continue to purchase. That's one big piece of the pie, right? I'm not saying that they can't grow organically, but when you're so big as their size, if you're not purchasing organically, to grow at the numbers are very difficult.
Yep.
So with that being said, if they're going to continue to grow and there's less out there, they're going to pay more money. It's just like a rarity of a watch or a diamond. As there's less and we become more rare, and you have these big boys out there that need to continue as their strategy to purchase, I firmly believe that multiples are going to go up this year, and they're going to continue to go up. And I understand that interest rates are going to go up, but I still feel that these agencies need to continue to purchase, and they're going to pay significantly more because there's less, which means, it's easier to have a lot more competition competing on those.
Well, I understand, it's essentially, how does the law of supply and demand work dynamically is what you're talking about. And, you said that agents, and buyers got to buy. I mean, that's understood that for a long time. But, sellers got to sell too. And one of the things that's interesting about our business right now is that it's still largely owned by people who probably look more like me than you. I think the average agency owner is now about 61, 62 years old,
right?
Male. And the numbers vary depending on what study you read, but still it's over half of the independent agency employment force is within retirement age in the next 5 years. So there's got to be a turnover of people, and those owners have got to do something, either perpetuating the next generation, which frequently doesn't want to be in the business, or selling. And so that it makes sense that there's a lot of incentive on the part of the sellers to continue to get out, particularly when guys like you are saying, hey, you got to use artificial intelligence in the next 24 months or you're in trouble, and they don't want to learn how to do it. So
but I would like to challenge that a little bit and also swim against the current. There's another thing called analyzing your options, which I think I recently sat with one about a year ago, and looking at them, very small in the senses of 4 people, very old agency. And I said to him that, you have a call center mentality, which he found a call center to handle all of his renewals. And he just really wanted to niche and sell one piece, which he come to like is really trucks. So I said to him, if you sell to me and I pay you 3 times, let's just make it simple. $1 million, I give you 3 million. Have you thought about just leaving it with the call center? You're only losing about 13%. When you are growing, you are writing some new business. If you look at your numbers over the next 10 years, you're going to make significantly more with very little headache by just letting the call center continue to do. And yes, some's going to erode.
Right.
And yes, you are paying 30%, but over 10 years, you made double than what I gave you. So I think there's going to be more of that. I've seen a few just recently over the last 2 years, more than I've ever seen before. I think there's going to be more agencies on the smaller side that may not sell out unless if the number is significantly larger, that, hey, what's it going to really take for me? And he literally said, Chris, in the last year, I decided to do what you said because it made sense. And I eroded less than what we thought. And if I continue at this pace, you know, in 7 years, I was going to make double than what you would have paid me. So I would challenge people to say, I do think there's going to be that's going to be a new recipe, I think, or is going to be more common.
It may be more common. I don't think it's new. It's the old run it into the ground
Yeah.
analysis, which many agents have done over the years in deciding not to sell. And there's some issues around that with employment and how do you feel about the people that work for you and some other things that you got to think about. But I do think it supports your argument that if more people decide to take that strategy, then buyers have to counter that, and the only way they can really counter it's with more money.
More money.
Yeah. So
these several agencies
mhm.
have no employees. They use a strict. It's a call center that takes.
Right.
I think it's 30%. So of the book of business, that's their transaction fee, 30%. They reshop. They even the new business, they ask for referrals. They get a little bit more if they get the referral, but at the end of the day, it's roughly 30%. And he legitimately said, Chris, I got rid of all my headaches of staffing, right? And yes, I work when I want to work. And at the end of the day, over the longer term, I'm going to make more money.
So let's encourage those who may be listening to us who are thinking about, hanging in for a few more years, just in terms of their personal balance sheet. Agencies right now are selling somewhere between 10 and 12, 13 x EBITDA, above $1 million in revenue. And let's say, probably averaging 3 to 3.5 today, maybe a little cases are outside of that, of course, on a revenue multiple basis. So if we had agree that those are generally good ballpark numbers,
yeah,
in the next 3 to 5 years, where do you see them going?
That's a great question. I think the multiples are going to depend on where you're at. I think the real multiples that are going to move significantly are going to be niche markets.
Mm-hmm.
I really believe in niche markets. And I then would say there's something called micro niches. Yep. So why I say that is because I had a good friend who recently sold his book at 46 years old. He only sold to physicians, and it was family-owned physicians. That's it.
Right.
He sold one policy, professional liability. And the amount of money he got for it, was staggering. But like he said, I'm that heart surgeon that only does one thing. I don't work on the whole heart. I only have this one specific surgery I do on the heart.
Right.
And I do think when you take the micro niches, and then you take non-traditional insurance, such as retro policies or captive or dividend type programs, which we love to focus on, I really feel those multiples are going to be significantly larger because the profit margins are significally larger. I couldn't grow over the last 7 years by 50 million in written premium if I didn't niche. Well, it's hard to do in personal life.
And not only is the new business really powerful in that way, but the retention is also much, much stronger. And so, my analogy, and so I think there's actually, to your point, something happening right now in the post-COVID world where, again, we have the ability to kill geography as a limit on our business through technology. And now you've talked about really making data accessible and usable at the agent level. To me, this does empower micro niching and almost makes it mandatory to be successful. So the way I would say it is, okay, if you've been in the manufacturing insurance space, well, now maybe you focus on plastic injection molding manufacturing, and you do it with companies that have fewer than 50 employees with sales between $2 and $5 million a year, located in 16. I mean, you can just keep narrowing and narrowing and narrowing and narrowing until you have a niche that no one else has, because no one else has created it. It didn't exist before you thought it up and found expertise and products and knowledge to fit it
and own it. Own that.
Right.
you
Because I
know.
mean, who would have thought of of delivery services or whatever being a great niche for insurance? I mean, when I read what you do, I thought, oh, that's interesting. I mean, there's a reason in a way you came up with that, right? But I do think that that brings up another uh, essential element for success in our business as we move forward, and that's creativity and insight. Because you know there are traditional niches that everyone knows about. Okay, so
Yeah.
there's restaurants and white tablecloth restaurant. I mean, everyone knows about that. Everybody wants to write contractors or subcontractors or whatever, but does anybody think about writing subcontractors in that are bricklayers that are minority owned, non-union, working on residential only in the sun? I mean, you know what I'm saying. And so
Oh
I
yeah.
think we're all missing, many people
Narrow
are
it down.
missing the opportunity to use creativity and then the insight, which is, what's going to happen to those businesses going forward and giving them the opportunity to grow. And so to change again just slightly, we talked earlier about the fact that you read, 130 books a year, and that, you're synthesizing information all the time. And so, uh, how does one use these new data tools that are coming in the next 24 months for people who don't want to read 130 books a year, okay, and spend that much time thinking about it? How does the average, let's say, agency owner develop those kinds of insights that allow them to create something unique and special in their agency on which to hang their hat for the future on?
I think the key factor is reaching out, and I think people are afraid, but pick up the phone and call people in that industry that you feel are successful in what you might want to do. Something that I was very fortunate to have a mentor say, every year you're going to do me a favor. You're going to reach out and you're going to find two agencies, and you're going to go in there and you're going to spend at least a day to a day and a half learning about their processes, their procedures, and how they do business. And the number one thing you're going to do when you get in there, you're going to ask them, hey, what did you fail at last year, Tony? What's your biggest failure? And then you're just going to shut up and listen. And then the second question is, what did you learn from that failure, Tony? Have you thought about that? Have you really dug into saying, hey, this was a learning experience, and this is what I would do to change? And I just think that has been very insightful, very helpful for me. So I do a lot of agency visits, and fortunate that I speak at a lot of different events, so I meet a lot of people. But you have to be willing to get out of your comfort zone, reach out to somebody. And I've never had more agents reach out to me and say, I heard you speak, and you said to ask, I want to come into your agency and spend a day, day and a half. And I bet you in the last 10 years, we've had 250 to 300 agencies from Arkansas to Alabama to California to Texas. Had one guy come out, became pretty friendly. He was United States Marine Corps, just really had much respect. I said, you know what, come stay at my house. He came and stayed. I didn't know him from Adam for 6 days. And we're friends today. Aaron is a great guy, and hopefully he says he learned a lot, and we're going to maintain friendship. And the goal is to bounce ideas off of each other. And what he wanted to do were some of the things that he literally picked, not only my brain, but the brain of some of my teammates on things that he really wanted to study the renewal process. We've spent a lot of time. We call every single client every single year. I know a lot of agencies say they can't do that. They can't afford to do that. I will look you in the eyes, Tony, and say, you can't afford not to. It costs you so much more to write a new piece of business. Why the heck would you not focus that money into focusing on people who you already earned their trust?
Right.
They bought from you. But we don't invest in those people. We invest in that shiny object, which is in this other box that we want to go get.
Right. We many years ago we had our agency valued by Marshberry, and anyway they wanted to use a retention number that wasn't accurate because they couldn't believe the one we had, and it was like 96%, I think, and they wouldn't accept it, and so we had to prove it. Finally got them to use it, and I said, look, this is the Hotel California. You can get in, but you can't get out because we live in our, so the point was we didn't have a renew as is place to check on a form or in a box. We never did that, right? Because the minute you do that, then you lose the business. And retention is everything. I tell, we help start agencies. We've helped about 250 different people start an agency, and they go, what do you start with? And I always tell them, you start with your retention plan. That's much more important than your new business plan. And again, it's hard for people to, who are trying to get started to get, but once you do the math, you recognize that. I mean, you can make a ton of money if you have a 95% retention rate.
Yes, you can.
Even if you're not adding very much business to your business every year, because you're not.
Got to be proactive, not reactive, Tony.
Yep.
You have to be proactive, just like your health, just like your education, just like your mindset. You have to maintain a proactive approach in everything we do, not a reactive.
Well, and it's so amazingly cheap, especially in personal insurance today, to requote business with comparative raters and stuff like that. I mean, yes, it's not the final answer and you have to finish it up and all that, but still, compared to the way we used to do it, it's unbelievably cheap. And so when somebody argues that they can't afford it, it's just because they haven't really thought it through, right?
Well, the other thing is you said something about relationships before. I'm not so sure that agents really trust carriers and carriers really trust agents. And I challenge some agents, and some may get mad, but if we're not calling our clients and saying, hey, Tony, we're doing an account review, your renewal's coming up in the next 65 days. Just want to check in with you. Have you, during COVID, I know it's been a tough period the last couple of years. Have you gotten a dog? Have you added a new pet to your house? I mean, it's massive. The percentage is massive of how many people added pets, right?
Right.
What if you got a pit bull? Are we as agents doing our job if we're not asking you that question?
Right.
I feel we agents owe it not only to the carrier, but we owe it to the client. And that's why I firmly believe that proactive, everybody deserves a phone call to do an account review. Did you add an addition? How many pools? I mean, the pools people, they can't keep up with the pools.
Right.
If I'm doing a good job, Tony, I'm going to find out, and I'm going to make sure not only that your liability on your home is as maxed out as we can get it, but we have to have an umbrella. Have to. It may be a 2, it may be a 5 million, but the risks during COVID have gone up multiple times because people have been home. Dogs, pools, right? It's just hockey rinks out here in Connecticut. What are people doing? They set up these hockey rinks in their backyards for their kids who are really big hockey people.
Uh-huh.
They're rented, so they get them for 3 months. Do you realize now those neighbors come over and play? Do you realize the liability risk? That puck isn't soft, Tony. Hockey's not a non-contact sport.
Right.
I mean, the liability has gone up, and I feel agents need to do their job, not only for their customers, but for our partnerships with our carriers. We owe it to them.
Right. Well, and this is that's a whole nother topic we could spend a lot of time on, because this actually is, to your point, not just because of the things you mentioned, but also with the inflation that hasn't been like it is currently for a long time. We've, gotten used to not really quizzing people about the value of what they own and how much, so one of the things that agents have got to do, because carriers are not doing it, frankly, is to make sure their clients are insured properly for the right amount based on all the inflation in construction costs and used car prices. And in fact, I talk to a lot of insurance folks, and what are you doing about used cars because you're not raising your rates enough? Used car prices are up 80% since 2019, 40% in the last 12 months, and you're raising rates 6% on physical damage. So, you're headed for trouble. And agents that don't appreciate and understand that and manage their books of business are also headed for trouble if they get any significant part of their income out of profit sharing, because that's a 23 and 24 chicken that's going to come home to roost that no one's talking about. But that's a topic for another day.
Oh, it is. I had a great conversation with a good friend of mine. He's the CEO of a small mutual company, and he just says a lot of carriers are sitting on a lot of money, but they're very nervous. 2 things that make them very nervous: used car parts are up 40 to 50% problem, and medical. inflation. Haven't seen these numbers. They're staggering.
Mhm.
And, you know, it's not things that agents think about, but it's things we need to think about because it's conversations we need to have with our clients.
That's right, because even if the rates don't go up, you need to be telling your clients, here's what the problem is, and eventually they're going to figure this out and then
Yeah.
overreact, right? And so you're going to need to be prepared for bad news maybe in a year. In the meantime, your house is now going to cost 25% more to rebuild. And
Yes.
whether they tell you you have to do it or not, what you don't want to find out is after the thing, after you have a big roof loss or a fire or whatever, that you can't rebuild your dream home and life is now a nightmare. And at the end of the day, that's my fault as an agent because I didn't ask.
And there will be an attorney knocking on your door.
Yeah. Well, so agents have never had in some respects, a tougher job because of all the things we've talked about. And yet, to your point, there's enormous opportunity out there. So it's just tweaking a little bit business practices and staying current. If anybody, and you mentioned your willingness to let people stand on your shoulders, which I appreciate. So if somebody wanted to reach out to you to say, gosh, Chris, I would either love to come see your agency or engage with you on any things we've talked about today, what's the best way for them to reach you?
Text me.
Okay.
860-836-1230. Just give me a text. Say, hey, I'm Tony, and heard you on this, and love to chit chat with you. Can we schedule a time? Or not a problem. We schedule a time, and if somebody wants to come out, we love visitors. We put you through a little question and answers. We love to drill you as much as somebody wants to come in here and drill us. So I firmly believe it's a really great learning opportunity, not only for my teammates, but also for the people coming in. So I can't tell you the little golden nuggets that we've got from people sitting here. They were looking at our renewal process and they said, hey, have you ever thought of this? And next thing you know, we're like, that's really, a big piece that we implemented were drop calls, slide broadcast. We got that from somebody who came and visited us 2.5, 3 years ago. And we've been fully implementing it in the last year, like extensively. And it came from an idea of somebody sitting next to us who flew out here to spend some time with our people. So it's bouncing ideas and really learning from each other. So even though that people say they want to come learn from me, we're gonna ask some questions because I know we can learn something from you.
Hey, last question, softball for you. But you said earlier, in the life insurance business, you look at who's on the wall because you want to know, what people care about, who they're in love with, that sort of thing. And that's, it's been a long time since I was a professional life insurance agent, but I remember that. And so behind you on the wall and on your desk are a number of American flags in various shapes, sizes, colors. Why the American flag, and what does it mean to you?
Grandfather came here in 1911, November 26th, came through Ellis Island. Fought in World War I, finished in 1918. My father then joined the military and both served in the United States Army. Love all branches, have multiple uncles. My father-in-law, United States Marine Corps. That flag stands for opportunity, hard work, and you can have anything you want if you put your mind to it. There is no greater country. Somebody can tell me how bad something is here. It's worse somewhere else. There's a reason why everybody wants to come to this country, because I firmly believe, as my grandfather firmly believed when he came here, took a 9-month journey to get to the United States, about a 5-month walking journey from way south, going all the way up to Naples to get onto a boat and come here, and then almost 3.5 months at sea to come here in the early 1900s. He said, the opportunity is yours. You just have to believe in yourself, number one, and work extremely hard. You can have anything your heart desires, and don't let anybody tell you otherwise. Greatest country in the world. I am the proudest American. It's not perfect, but I can tell you it's the greatest country in the world, and there's no better place to live.
Well, I don't think we could have a better way to finish. And so, Chris, thank you for your time today. I've really enjoyed it.
Thank you for having me.
You bet. I'm talking to independent agency owners about this all the time. If you'd like to have a more personalized conversation, click on the button or the link in the description, and we'll make that happen. You can also reach out to me at tonycaldwell.net/contact.